Hi guys, welcome to my YouTube channel. Here I am back with another informative video. So the topic of the video is how to use the donor advised fund to lower your taxes. So in this topic we will discuss how the donor advised fund can be used as tax smart planning and how what is the donor advised fund basically. So discussing about the topic, donor advised fund DAF is a simple, flexible, and tax advantageous way to give to your favorite charities. A donor advised fund or a DAF is like charitable investment account. It is like a charitable investment account for the sole purpose of supporting charitable organizations you care about. So when you contribute cash, securities, or the other assets to our donor advised fund at a public charity like Fidelity Charitable, you are generally eligible to take an immediate tax reduction. Then those funds can be invested for the tax free growth, and you can recommend grants to any eligible IRS qualified public charity. So you want your charitable donations to be effective as possible when you give. Donor advised funds are the fastest growing charitable giving vehicles in the United States because they are one of the easiest and most tax advantageous ways to give the charity. So let's make an in-depth look how DAF works. So, is our donor advised fund right to you? So, take this six question quiz to determine whether our donor advised fund suits your needs. So, how our donor advised fund works? So, first of all, give, make tax deductible donations, establish a giving account, and then donate cash, stocks, and non-publicly traded assets such as private business interest, cryptocurrency, and private company stocks to be eligible for an immediate tax deduction. Then grow your donations tax free. While you are deciding which charities to support, your donation can potentially grow, making available even more money for the charities. Then grant, support charities you love now or over the time. You advise us on granting the money to your favorite charities now or over time, from your local food bank to your house of the worship to organizations with international impact. Support charities you love at a pace that is comfortable to you. So, a smarter way to give. There are three simple steps: give, grow, grant. What if you could support your favorite charities with just one donations? That's the power of a donor advised fund. Fidelity Charitables is called giving account. So when you discover the details of donor advised funds, it is easily contribute a wide range. What are the benefits of the donor advised funds? It easily contribute a wide range of assets. Giving non cash assets is often more tax advantageous than giving via cash or the credit card, but it can be difficult for many charities to accept these charitable contributions. Contributing assets other than cash is a simpler way of giving simpler way with a giving account. In some cases, it is possible to transfer stock directly from your brokerage account with the click of the button. See what you can donate. Assets generally accepted include restricted stock, publicly traded securities, or mutual fund shares. Private equity and the hedge fund interest. Certain complex assets such as privately held C Corp and S Corp shares, cash equivalents such as checks, wire transfers, or cash positions from a brokerage account, Bitcoin, and the other cryptocurrencies. So, the second is maximize the potential of your tax benefits. As soon as you make a charitable contributions, you are eligible for an immediate tax deduction just as you would be by donating to the another public charity like your local home shelter or pantry, but some donations could make you eligible for the additional benefits. Then comes cash donations. If you donate cash via check or wire transfer, you are generally eligible for an income tax deductions of up to 60% of your of your adjusted gross income. Then donations of long term appreciated assets. Donating a long term appreciated security directly to the charity instead of liquidating the asset, and the donating proceeds can help maximize both your tax benefits and the overall amount you have to grant to the charity. These donations provide two tax benefits: become eligible for an income tax deductions of the full fair market value of the asset up to 30% of your adjusted gross income, then potentially eliminate and maximize capital gains tax on long term appreciated assets as long as they have been held for more than a year. So and invest your donations for tax-free growth. Once you have funded your donor advised fund, you may recommend any investment strategy for your account, potentially growing your account and providing you with the more dollars to grant to the charity. Many sponsoring organizations also have programs allowing you to nominate your financial advisor to manage the investment of your charitable funds. Then how much a donor advised fund cost? The Fidelity charitable giving account has no minimum initial contribution requirements and one of the lowest annual fees of any donor advised funds. Total fees of the giving account typically amount is about 1% of the balance. That's generally less than the operating cost associated with a private foundation or the fees for donating with credit card. So simplifying record keeping and organization. With our donor advised fund, you don't have to pay track of every gift, acknowledgement, and from every charity to support just to the receipt from your DAF contribution. When you are ready to support your favorite charity, you can simply log into your account and recommend a grant to any IRS qualified public charity. So then we come to the three simplest step to get started today. First of all, open. Then open how to open the account, open a giving account. So if we discuss about this, um, if we discuss about this, we will discuss that it takes less than 5 minutes. Opening a giving account is simple with no minimum to open and no going on balance to maintain as you continue your giving journey. So second is fund stocks, bonds, cash. Decide how you want to fund your account and how often. The third is gift. How help charities you care about. A giving account make it possible for you to recommend your perform possible for you to recommend grants to multiple charities per year and increase your philanthropy options. So then we will make a more difference. So donating stocks to the charities, it is simple, easy, and impactful. Long term appreciated securities including stocks, bonds, and mutual funds can be donated directly to the charity. These are the generally tax deductible for the full fair market value. Then comes naming your donor advised fund. Though our donor advised fund is not foundation or our trust, many donors choose to grant from their giving account as they would from a family or a private foundation. Because of this, some elect to use language in naming their donor advised fund. So donating an IRA and the other retirement assets, it's always possible to donate the retirement assets including IRA 401ks and 403bs by cashing them out, paying the income tax attributes to the distribution, and then contributing the proceed to charity. How does a giving account work? Discover the details of Fidelity Charitable's giving account. The smarter way to give maximize your impact and simplifies your charitable giving. Then additional information review our FAQs to help you better understand how the giving account works. So here I like that I can make one contribution to my account, and from that contribution I can donate to several organizations. It shows all your contributions and keep track of them. Donating the several organization is easy versus sending a donation to each individual organization. So here we will discuss that tax smart planning if using a donor advised fund. It's the fourth quarter of 2020. Then we will discuss our donor advised fund is as we has discussed already, that is a popular charitable vehicle that allows donors to make charitable contributions to an eligible fund, then receive an immediate tax deduction, and then recommend grants from the recommend grants or to their favorite charities whenever it makes sense for them. So SCI offers RDAF called the SCI Giving Fund. The SCI Giving Fund is administered by the Renaissance, the charitable foundation. How does our donor advised fund work? Donor receives an immediate tax benefit by contributing assets and cash to the DAF. If donating appreciated assets held for one or more than 1 years, so the donor gets to deduct the fair market value of the asset subject to the certain limitations and avoid the capital gains tax on the appreciated assets. Donor advised funds are designed to allow donors and their families to meet philanthropic goals for the generations to come. So donating appreciated assets to RDAF, for example, you have owned XYZ stock for a long time. It has a fair market value of $15,000 and a cost basis of $5,000. If you were to sell the stock, that would be $10,000 long term capital gain and a 20% tax rate of $2,000 in taxes due. So what will be the FMW as a fair market value is $15,000, then its cost is $5,000. So what is the gain? Gain is about $10,000 or multiply by 20% tax rate, which is equal to $2,000 in tax. If you donate the stock to a DAF such as the SEI Giving Fund, the stock will be sold by the DAF, a charitable entity. The proceeds will be invested into an available mutual fund strategy. You can save 2,000 in the taxes and receive 15,000 charitable contribution deduction. So when we discuss potential benefits of a DAF, it receives an immediate income tax deduction. It has simplify your charitable giving. No tax reporting is required by the donor as the opposed to a private foundation. Then it supports one or more charities. Give anonymously. Flexibility if you donate securities that have appreciated significantly over time to a DAF and you avoid capital gain taxes, receives immediate benefits of our charitable deductions while giving yourself time to decide where to direct funds. So what you can contribute? You can contribute cash, mutual funds, exchange traded funds, publicly traded stocks or bonds, real estate, closely held stocks, and the other hard to value assets may also be contributed after review and approval by the foundations. The minimum initial donation to the SCI Giving Fund is $5,000. So what is the tax planning ideas to consider? Donate appreciated securities. The capital gain is not recognized for tax purposes. Donate mutual fund shares estimated to pay out large gain distribution. The burden of the mutual fund capital gain distributions is shared by all the investors in a fund, even those who did not sell shares. By donating share of these funds, the investors may bypass the capital gains tax assessed on our distribution. So front load charitable contribution is a high income year. For example, a pair of DAF contributions with a Roth conversion, a bonus, or a stock option exercise. If you realized capital gains or sold real estate or a business, so the Roth conversions are considered income and are generally taxable. One way to help offset the Roth conversion income is to offset the conversion with charitable contributions. Lump and clump strategy for itemized deduction. You could lump multiple years of the contributions into one year and clump the contributions into donor advised fund, thereby by increasing itemized tax deductions and effort to hurdle the standard deduction. What is National Day of Giving? National Day of Giving encourages giving back. Every year on the Tuesday after Thanksgiving, people take the time to kick off the holidays season by giving back to their community, whether it is donating money to a charitable cause of or volunteering. So giving Tuesday is a day of to the benefit the community. So donating to your donor advised fund can be great way to participate in the National Day of Giving. Reach out to your financial advisor to discuss if our donor can donor advised fund fits into your financial future. So discussing more about it, we will discuss here four contribution strategies with our donor advised fund. So a growing number of the donors are the families with the simplicity and the tax benefits of giving with our donor advised fund, so including the ability to claim an immediate tax deductions and a spread giving over time. Recommend investment allocations of donated funds for the potential growth and easily contributed appreciated securities. But even if you have embraced using our donor advised fund, you may not be taking advantages of all your charitable contributions. Strategies that could help you potentially maximize your giving and potentially minimize your tax burden. Donating long term appreciated securities as part or of your portfolio rebalancing can help keep your overall finances robust, and so you can more easily give for years to come by scheduling recurring donations or donating windfall income from the events such as business exits, and then potentially lowering your tax burden is an unusually high income year. The savvy strategies for the are the worth our discussion with your financial advisor. So don't rebalance your portfolio without also thinking about your charitable giving. If you are a charitably inclined investor who uses an asset allocation approach to your portfolio, the rebalancing process is a ripe opportunity to help increase your support to the non-profits while managing the overall health of your investments portfolio. Rebalancing is a periodic disciplined strategy of selling the winning assets classes in your portfolio and relocating that investment into different assets classify that's the more of a more are lagged, said Brandon O'Neill, Vice President and a charitable planning consultant at Fidelity Charitable. Of course, when you make the sale, you realizing capital gain if it's in a taxable account. So that's why, according to O'Neill, incorporating charitable giving strategy when you rebalance makes good financial senses. Instead of simplify selling long-term appreciated securities, periodically cherry pick the one with the most appreciation by the donation them. So them a public charity with a donor advised fund program. Instead, you can potentially eliminate taxes on the capital gains and be eligible for a charitable tax deduction on the fair market value of the stock. The strategy does not does more than align your portfolio with the allocations level that make the most sense for you. So your donations also can be invested, potentially grow tax benefit tax free while you decide which charities you would like to support. So the end result is you are able to give more to charity, but your taxable investment portfolio is more tax efficient. So this is a way to take high advantage of your charitable intent to make your taxable investment portfolio more efficient. So that was all about the today's topic, where we discussed that what is a donor advised fund and how you can use donor advised fund as a tax smart planning if you are using a DAF. So hope this video will be beneficial for you. So kindly subscribe my channel for more helpful videos in future. Thank you so much.